So, as we head into April, the stock market is caught in this massive tug of war. I mean, on one side, you've got decades of history, literally screaming that this should be a great month for stocks. But on the other, yeah, you've got the fresh scars from a really brutal sell-off in March.
So the huge question on everyone's mind is this. Is the market setting up for a classic April relief rally? Or is this whole thing just a trap, a dead cat bounce, right before the next leg down? Well, that's exactly what we're going to break down.
And this slide just perfectly captures the two forces pulling against each other. Over on the left, you've got the historical powerhouse. April is consistently one of the strongest months of the year, no question. But then you look to the right, and that's today's reality. A lot of significant technical damage was done to the market in March, and that could really weigh heavily on any potential bounce.
Okay, so first up, let's explore the bullish case. What are the arguments for why the market might be poised for a pretty significant bounce, following that historical playbook?
What's really wild here is just how reliable April has been. Since 1957, the S&P 500 has finished April in the green about 73% of the time. But get this, over the last decade, that number jumps up to an even more impressive 85%. So yeah, history is clearly on the side of the bulls here.
So why is April so strong? Well, it's not just a coincidence. There are some real fundamental drivers. First, it's tax refund season in the US, which means a surge of cash often finds its way into the market. Second, a major source of selling pressure, pension funds rebalancing their portfolios, that all ends on March 31st. And finally, you have fund managers buying up beaten-down stocks to make their Q1 reports look better. It's a practice called window dressing.
And here's a bit of a contrarian twist for you. A lot of market analysts, they're not scared by the March sell-off. In fact, they kind of see it as a positive. The logic is that the market has become so oversold that it's actually created the perfect setup, like a springboard for a powerful rebound.
And this brings us to a crucial piece of evidence for the bulls, the Fear and Greed Index. It's currently sitting at just 10, a level that signals extreme fear. That basically means sentiment is completely washed out.
So what does a reading of 10 actually mean? It's a really powerful contrarian signal. It tells us that pretty much everyone who was going to sell has already sold. The market is so pessimistic that even slightly less bad news could trigger a massive rally. The whole thing is essentially wound up, just ready for a snapback.
Okay, now let's flip to the other side of the tug-of-war, the case for a further drop. This argument is all about the real and significant damage the market took on in March. And the damage starts with this number right here. The S&P 500 dropped a painful 6.8% in March. Now, that's not just a minor dip. That is a significant blow that has really shaken investor confidence and created some major technical headwinds.
And that fear, it isn't just a feeling. You can actually measure it. The VIX, often called the market's fear gauge, recently spiked to over 31. That's its highest level in more than a year. Any reading over 30 means the market is pricing in daily swings of roughly 2%, which is a very anxious environment to be in.
And for all the chart watchers out there, the market technicians, this is a major red flag. The S&P 500 has broken below both its 50-day and its 200-day moving averages. These are key trend lines that professional traders live and die by, and being below them is a clear technical sign of weakness.
So even if the market does try to rally, it's facing some major hurdles. I want you to think of these levels 6,600 and 6,800 as just walls of sellers. These are all the investors who bought at higher prices and are now just waiting for the market to get back to where they bought in so they can sell and break even. This overhead supply can easily stop a rally dead in its tracks.
But beyond the bulls and the bears, there's one huge wild card that could just override everything else. The one factor that could be the ultimate spoiler for April. And that's the price of oil. And here's the number that's keeping investors up at night. Brent crude oil has surged to $114 a barrel. This is a massive shock to the system, and it's the primary reason for that big spike in the VIX we just saw.
I heard one analyst describe this perfectly, calling it a major vibe killer. And that's exactly what it is. It just sucks all the optimism out of the room and forces everyone to reconsider their bullish assumptions for the economy and the market. So why is this so problematic? Well, first, it threatens to unleash a whole second wave of inflation, just when everyone was hoping the central banks could ease up. Second, it directly squeezes profit margins for companies. And critically, it brings us uncomfortably close to that $120 danger zone, a level that has historically triggered global economic slowdowns. So, you've got these incredibly powerful forces pulling in opposite directions. As the month unfolds, what are the key signals you should be watching to see which side is actually winning this tug-of-war?
Here's a simple scorecard for you. For the bulls, you want to see the VIX fall back below 30. You want to see buyers step in and defend that key support zone between 6,130 and 6,200. Now, for the bears, the warning signs would be oil continuing its push toward that $120 danger zone and hearing a lot of cautious guidance from companies as Q1 earnings season begins.
And you'll want to pay attention right away. Historically, the first week of trading in April is absolutely crucial. It so often sets the dominant trend and the tone for the rest of the month. Which brings us right back to this powerful metaphor. With that fear and greed index at 10, the market is like a rubber band that has been stretched to its absolute limit by pessimism and fear. The tension is just immense.
And that leaves us with the final definitive question for April. With all that tension built up, is that rubber band about to violently snap back in a massive relief rally? Or is it simply going to break?